Welcome back to the Digital Asset Report. Bitcoin just shot past 108,000, an indication of the larger picture in the digital asset industry right now. If we zoom out, the global crypto order is shifting, and behind the scenes, power players in government, finance, and tech are repositioning themselves quickly. From London to DC, Wall Street to Tokyo, digital assets are taking center stage, not just as investments, but as the battleground for economic leverage. And here's a milestone worth celebrating. Bitcoin just hit block height 900,000 and crossed 6,000 days since launch. That's over 16 years of uninterrupted, permissionless operation. No bailouts, no boardrooms, just math, code, and time. Bitcoin continues doing exactly what it was built to do: produce blocks every 10 minutes without fail. Let's get into the news. Bitcoin's latest rally comes as U.S. Treasury Secretary Scott Bessent meets with Chinese Vice Premier He Lifeng in London to try and cool down trade tensions. These are the highest level talks since Trump's April tariff escalation and policy that sparked a mini exodus from U.S. equities and sent Bitcoin down to 75K. But with negotiations back on and crypto IPOs reigniting investor appetite, sentiment is slipping again. And it's not just price action, it's policy, portfolio strategy, and public markets all converging. Just look at the numbers. Crypto funds pulled in over $7 billion in net inflows last month. That brings total assets under management to an all-time high of $167 billion, according to Morningstar. Compare that to global equity funds, which lost nearly $6 billion over the same period. Investors aren't just hedging, they're reallocating. Gold funds, equity funds, and even the US dollar itself are taking a back seat as capital flows towards crypto. Institutional momentum is building. One big reason is the rise of the Bitcoin ETF era. BlackRock's iShares Bitcoin Trust, ticker symbol IBIT, just became the fastest ETF in history to hit $70 billion in assets under management. It took a little over 500 days for this record to be broken. The previous record holder, SPDR Gold Trust, took 1,691 days to do the same. IBIT now holds 3.3% of all Bitcoin, putting BlackRock right in the Bitcoin history books. But it's not just passive exposure that's growing. Direct accumulation is surging too. Strategy just bought another 1,045 BTC for $110 million. That brings its total holdings to 582,000 Bitcoin, over 2.75% of the total supply. The move follows a massive $1 billion stock offering structured to appeal to yield-hungry institutional buyers. Michael Saylor's blueprint isn't just catching on, it's being copied. Japan's Metaplanet, France's Blockchain Group, and Norway's NBX are all jumping in, betting big on Bitcoin treasuries. Meanwhile, across the Atlantic, the UK is flipping the script on crypto policy. The Financial Conduct Authority just proposed lifting its ban on retail investors buying crypto ETNs, exchange-traded notes. Their goal is to rebalance risk and let consumers decide for themselves. That's a major pivot from last year when the FCA deemed these products too dangerous for retail hands. But with digital assets now being viewed as critical to economic competitiveness, regulators are rethinking fast. Crypto derivatives are still off limits, but ETNs could be coming back to the high street. In the US, that regulatory rethink is gaining a new face and a new voice.
The Securities and Exchange Commission must adopt a regulation based on the authority that Congress has given us. Another core feature of blockchain technology is the ability of individuals to have self-custody of crypto assets in a personal digital wallet. The right to have self-custody of one's private property is a foundational American value that should not disappear when one logs onto the internet. I'm in favor of affording greater flexibility to market participants to self-custody crypto assets, especially where intermediation imposes unnecessary transaction costs or restricts the ability to engage in staking and other on-chain activities.
That's a clear statement of intent from SEC Chairman Paul Atkins, a signal that federal securities policy may start finally aligning with the architecture of decentralized finance. Atkins called for formal rulemaking to support self-custody, staking, and on-chain innovation at their DeFi roundtable on Monday. He warned against using old frameworks to strangle new technologies. And he floated the idea of an innovation exemption, a path for compliant experimentation implementation that could help make the US the crypto capital of the planet. And as Washington debates rules, NASDAQ is quietly redrawing the map. XRP, along with Solana, Cardano, Stellar, and others, was just added to the NASDAQ Crypto US Settlement Price Index. That means we're inching closer to a regulated benchmark that reflects more than just Bitcoin and Ethereum. The Hashdex NASDAQ ETF, currently limited to just BTC and ETH, filed to adopt the broader index. If approved, it could be the first regulated ETF with diversified crypto exposure. That decision lands in November. From ETF dominance to treasury-scale buys, regulatory reversals to DeFi rulemaking, this week showed us just how fast crypto's center of gravity is shifting to prioritize legitimacy, infrastructure, and integration into the mainstream. The question isn't if crypto will be part of the global financial system. The question is how much of the system becomes crypto. That's all for today. If you enjoyed this video, be sure to give us a like and a follow and head over to bitgo.com to learn even more.